All right, good evening and welcome to my midweek recap here for the S&P 500 and plan ahead for the remainder of the week. As you can see, there's a lot of notes here for this week already. Trying to recoup some of my losses from the 280 calls I'm still in, also in December 300s and June 325s, so they're only worth mentioning. Um, Real quick, I have to zoom in here on a lower time frame. I was trading on the 2 and 5 minute charts here this week on Monday and Tuesday. Ended up actually taking some puts, oddly enough here. Monday off the 8 EMA, got a 269 puts here at 105 and closed those out down here at 147. Nice trade there. And then looks like here we go. I got into some 268.5 calls here. These were for Monday expiration, excuse me. So these were just for quick trades in and out. Wasn't looking to take any swings. Took these 105s here. Once this flag started breaking, had rejection off of VWAP. I got out at 103 for a very small loss. And then ended up taking calls again down here. It was a very specific setup that actually ended up failing overall, but I held through the pain and took me out here for a nice gain towards the end. So initially got in here at 131 on this break above, took some off as it ran into the little T line, which is the 5-minute 8 EMA here. Saw the tape flash red, took half the position off at 139 just to lock some in. As I said, held through the pain. Once it popped back up and finally sellers hit the tape again, even though it was on lower volume over here, I went ahead and I took that position off. So decent trade there. And then later on, looked like we were holding this prior support, so I got in some 266.5 calls here. Again, these are all expiring same day. In at 88, once it failed, I got out at 71. A little bit of slippage there on that move. End of the day, I ended up taking some 262.5 calls here for a quick trade. I did get some off for a profit. The rest trailed me out over here once it failed to hold above and put in a bear flag at 99, so that one ended up being a winner as well. Didn't capture this move here overnight on Tuesday, but Tuesday, I was able to get in these 264.5s for Wednesday, in at 254, and the volatility, implied volatility got sucked out of it and ended up having to take a small loss on those. Later on in the day, took some 265 puts here on the breakdown of the VWAP versus this higher level up here. Nice breakdown, took half off for a small 20-cent gain. The other half trailed me out actually on a little pop above here. This was on a 2-minute chart, so once price action did start to break up and start to climb, looked like it was going to reclaim VWAP again. I went ahead and closed that out. Missed out on a nice trade there. I think they went to like 270 or something, so I was a little bit careless with that position. Could have managed it a little bit better. Nothing else was done there on Tuesday. Now today had this nice big channel set up. Didn't add anything, didn't do much until the end of the day. Had a very specific setup here towards the end of the day. Found support at this channel here that did set up, excuse me, right above the 8 EMA. So I went ahead, I took some Friday 271 calls here. I got in at 211. So I'm still holding those for a move up tomorrow, some continuation. And looking at the after hours time, looks like it was a nice call. I'm expecting these to go up and possibly touch 273 fairly quickly in the day tomorrow just to test this, excuse me, extend that out, just to touch this top end of the channel, maybe even the 21 EMA up here at 275 and a quarter. What it looks like to me, even though the daily time frame, as I go over to the higher time frame, excuse me, what it looks like to me is this is going to be a bear trap. Of course, on a perma bull, I'm going to say that 9 times out of 10. But the reason being, we've reclaimed some very significant levels here on a yearly basis. This 267.84, which is right here, right around here, which is the yearly open. Reclaiming that has now turned this year back green. A couple of different charts I'm going to pull up here. So the year candle now looks like this. If we just zoom out, it's a little bit more evident as to what's going on. The year has been a choppy year, just like I'd say this year back here in 2011. A couple of years here, 14, 15, 16 finally started breaking higher. Choppier here, 2005. Trend is still up. Buyers did win October. I will give them that. There's no problem with that. And as I zoom in here, you can see it's a big red bar, tremendous amount of volume, which I've already highlighted in numerous of my last videos. But as I zoom out here, we can ignore these arrows for now. I'll get to those in a moment. Big red bars on a monthly basis have, for the most part, led to an inside month following. So we had here February into March. January into February. Zooming back here, this was 2011, August into September, inside bar and finally up higher. And then back in 2008, which was, as I keep mentioning, everybody knows is a financial crisis year, 2000, 2008, both years that were extremely, extremely bad for the markets and overall world economies. The only instance I could find that there was a big red bar and an inside bar following it that broke down was here in 2007, leading up into, of course, the financial crisis. The other prior one, 2000, this wasn't really an inside bar, but it was a very similar setup. Sellers pushed all the way down, found support, put in almost an inside bar, and broke lower. Again, the year 2000 was the dot-com bubble. So crisis years are kind of the outliers in the overall picture of the markets and what's going on. I have this note here. This was the last time, or really the only time, that price action came down late in the year, tested the opening year price. It ripped back up, and for 2 years kind of chopped, and now we are where we're at now. So that's that. And then on the weekly chart, just did a little bit of messing around here. This was a hammer candle as it was forming when I started looking at these candles. What I did was I went back and I looked for the green wide range hammer candles that started setting up after a massive sell-off. So there were 11 instances. As I zoom out here, you can see them. First ones came in 2002 and 2003. Big red bar, hammer candle, tested lows, put in a base, and continued much higher. These are on a weekly basis, so this does take time to set up, but the most important thing right now is immediately after these hammers, tremendous follow through. Okay, we did test lows eventually, of course, but only after it found some resistance or some supply area after the hammer actually put in. Again, this weekly bar currently has not completely closed, so it's not completely formed, so it's kind of tough to call it that at the moment. One closest to what we're looking at right now is this candle here in 2011, which is the indecision bar. And as you can see, it did run up, at least try to test one of the prior breakdown levels after a couple of weeks and rejected, came back down, tested lows, and of course put in a base, only to push up much, much higher going forward. Zooming in here, or excuse me, scrolling back over here, last hammer candle after a sell-off here was in February 2014. What did it do? Ran into new all-time highs. This one I highlight, this isn't necessarily the most ideal hammer candle. It is a very long body, so it doesn't necessarily fit the typical description of a hammer, but is worth noting. The following hammer candle actually did put in a nice gap up the following week, and again came down, tested lows, put in another hammer candle in itself, which is a very long wick, tested that low again. So all these hammer candles look like they're doing is putting in a base on a lower time frame for a move higher. So for now, just like back in here, putting a long wick, buyers are at lows, as I continue to mention in my videos. Buyers are coming in at lows with a tremendous amount of strength. Now on the actual trade plan here, these green blocks that I've highlighted already in a couple of my videos are where there was a significant amount of volume coming in on the day. Of course, lows here on 10 October, lows here on 11 October, lows here on 22 October, here again 24 October, and 26 and 29. So volume is coming in at lows, at dead lows of the day, mind you. So when that does happen, that means there's someone, some participant, some big money putting their money to work at the lows of the day. If you're an institution and you're trying to hide your position, or you don't want to tip off the market to what you're doing, you do it over a series of plays. So you start to take a low position at just above the 200 SMA, break down below it. As it tests and holds around that level, you get some more. As it dips down, you start adding. Simple as that. Prior level of support, there's obviously demand. You look over here on the higher time frame where all these wicks are, where price action stopped, made a U-turn, and started coming back up. There is demand at lows. That's the most simplistic way of putting this. Absolutely nothing bearish about what's going on right now. Sure, there's a lot of negative news on CNBC, Fox Business, Bloomberg, whatever. There's a lot of talking heads spouting their nonsense about they're playing defensive. They've taken their money out of the market. In my opinion, it's like these money managers have their money sitting on the sidelines, and their customers are getting pissed off. They're asking, why aren't we involved in this last 2 to 3 year move of the strongest bull market we've ever had in the US stock market? So now they have to try and talk down price. They're going on talking about all their fear, trade wars, all that stuff. It's all going to be resolved. It's just a matter of time. So they're being pressured. They have to do what they can, most likely putting some of their money at work now, and we're going to move higher. And it looks like, to me anyways, depends on how this week closes, of course, to confirm whether or not I'm right. But as I opened up that after hours chart, still price action is up fairly nicely here after hours. I'm not sure what caused that sell off here towards the end of the day. Probably just bulls didn't want to hold overnight out of uncertainty. Not sure what's going to go on, and as you can see, there were buyers to pick that price up. Excuse me. Touch here on the futures and what's going on right now. After hours, very similar to what's going on with SPYs. So we can just leave that on there. This is the overall broadening pattern that was setting up here. The most immediate one was right here. Broke with strength, with strength yesterday. Wasn't sure it was going to hold, and retested after hours and continued to run. Looks like it's doing the same exact thing here today. We broke above the actual, the higher time frame here. Resistance, broadening wedge, whatever you want to call it. There's retested here towards the end of the day. That's exactly where the volume came in. Just extend this out, you can see almost a perfect retest, and it's continued higher. So right now futures are looking very strong, and this green bar is actually turning into a very nice hammer candle. Even if we do test lows, most likely there's going to be secondary participants who did not get in at this initial spot are going to buy that. Real quick here and draw one line on here and see what's going on. Sure, it broke it. Anytime a support is broken and price rallies back up through it, that's your secondary play. If you say you buy this level, you get stopped out, you maintain your stance. If price action reclaims that kind of level, that's a bullish play. That's an opportunity to go ahead and add on the way up. Stop loss is below. Sure, you have a little bit of a wider stop loss. Right now it would have been about 30 points on that reclaim. So looks like price action is looking to point back higher. So just have to wait and see if that does confirm. But for now, this is going to be my trade plan for the S&P 500. I don't really have any plans to add anything right now. Very concentrated on trying to get out of the 280 calls that I am in as they expire next week. I'm looking for earnings from Apple to come out and boost the market, just like Facebook did. Had some nice trades in Facebook as far as the short side. But Apple should lift the markets again tomorrow after hours, and hopefully I'll be able to go ahead and get out of some of those calls. So for now, this would be my trade plan for the SPY going forward into next week. If you have any questions or comments, please feel free to leave them down below. And as always, you're welcome to come join us at the Trade Crew chat room. It is a free chat, and follow along with some of these plays and analysis live. Have a good evening and good luck.